All right, let's dive into a massive shift happening in one of the world's fastest growing economies. We're talking about India, and it's completely reshaping its banking scene to create a new generation of financial giants. Now, the big question is, why should you care?
Well, the short answer is a definite yes. Look, this isn't just some minor policy tweak. It's a fundamental restructuring of India's public sector banks. So whether you're an investor, a business owner, or just curious about the global economy, believe me, the ripple effects from this bank merger strategy in India are going to be huge. So where did all of this begin? Well, the whole thing was kicked off by a major announcement that came right from the top of the Indian government. That's right. India's own finance minister, Nirmala Sitharaman, came out and confirmed that talks are officially underway to merge multiple public sector banks. This isn't just some vague idea floating around. It's a very deliberate plan. The goal here is to take a pretty fragmented system of smaller state-owned banks and consolidate them into just a handful of powerful, large-scale institutions. This, of course, brings us to the big why. Why now? What's the strategic thinking behind a project this massive and, frankly, this complex? Let's break down the core idea.
At its heart, bank consolidation is all about creating strength through size. Think about it. You take several smaller banks, you merge their assets, their networks, their capital, and you forge a single, much more powerful institution. The key result is what we call a larger balance sheet. This basically gives these new megabanks the financial muscle to fund the kind of huge, nation-building projects that smaller banks just can't handle on their own.
And the government's been really clear about its aims here. First, they want to create world-class banks, ones that can actually compete on a global stage. Second, and this is so crucial, they want to build banks big enough to finance India's massive infrastructure goals. Third, it's about efficiency, cutting down on redundant costs and overlapping branch networks. And finally, the idea is to create stronger banks that are just better at managing financial risk. It's all part of one big, ambitious strategy. So the strategy is ambitious, for sure. But here's the thing. With bigger banks comes bigger bets. This kind of major change is a high-stakes move. It has enormous potential upsides, yeah, but also some very, very real risks.
And this slide really lays out the two sides of that coin perfectly. The potential upside? It's huge. We're talking stronger banks that can fuel credit growth for the whole economy and create a more streamlined network for customers. But the downside is just as serious. Merging huge institutions means untangling incredibly complex IT systems, blending completely different work cultures, and navigating a maze of regulations. If you get any of that wrong, the whole thing could grind to a halt. The impact of this whole strategy is going to be felt pretty much everywhere, but it really falls into three key areas. First, banking stocks. Investors are going to be scrambling to figure out the winners and losers in this new landscape. Second, national credit growth. The big question is, will these new giants actually lend more? And third, the day-to-day operations of the banks themselves. From branch locations to employee roles, every single one of these areas is heading for a major transformation. Okay, so this all brings us back to the most important point. Why does this matter for you? Especially if you follow the financial markets. This is where the story gets really practical. For anyone interested in Indian banking stocks, here are the key signals you need to be watching. First and foremost, keep your eyes peeled for the official announcements that name these specific banks being merged. Second, watch for any new policies or regulations designed to make this whole process smoother. And third, pay very close attention to how the market reacts. Analysts will start re-rating these stocks, looking for signs of a smooth integration and strong leadership. That's how a new landscape of perceived winners and losers will start to emerge. And that right there is really the multi-billion-dollar question at the heart of this entire thing. The plan to build bigger banks, that's crystal clear. But whether they will actually become better banks, more efficient, more competitive, and better for the Indian economy, well, that's the story we'll all be watching unfold. Thanks for tuning in.